Hi friends, welcome to Money Dose. My name is Ratul. So this is a continuation of my earlier video, Trade with Technical Analysis. This is the part 2. If you have not seen the part 1, please go and watch that video first. The link has been shared in the description box below. In the first part, we have seen how exactly we can use the different technical parameters like candlesticks, MACD and RSI. So today we are going to see the next 3 different technical parameters. I am sure you will definitely like it. I have used this concept in my trading and I have seen benefit out of it. Request you to kindly watch the video to the end. If you do like the video, kindly like, share and subscribe. Thank you. In our last video, we have seen how exactly the candlestick pattern works. We have also seen the function of MACD and RSI. So with these three technical analysis, we can find out the price movement or the price action. Today, we will see how exactly we can go in the different sets of technical analysis. That is the moving average, how exactly a moving average we can plot, and what we can derive out of it. We can also see the functions of Heiken Ashi candles. We will also see how exactly the Fibonacci retracements helps us in terms of identifying the market movements. We'll also see the pivot points which will help us in terms of to know the resistance and the support levels of the market. So let's continue with our first point, which is called the moving average. Okay, so this is my Zerodha platform, which is a Nifty 50 chart. So this is a Nifty bank, in fact, which I've taken. So let me first plot the moving average so that we can understand how exactly what we can derive out of it. So to plot a moving average, you have to go to the study. You can type moving average. So let me take a 50 days moving average. Let me take the close day price. It has to be exponential. And the color, okay, let it be red. Okay, so this line has formed, which gives us an indication this is a 50 days average price of Nifty Bank. Now, if I compare the moving average with a 26 days, same close exponential, and I'll color it as green. Okay, so you can see that whenever the green line is above the red line, the market is in a positive directions, and whenever the green line is below the red line, the market is into the negative or the downtrend, the bearish phase. Again, here if you can see, the market has crossed the red line and it has entered into the positive zone. The market has moved up, and again if you can see over here, the market has started going into the negative directions and the line has also crossed the red line. So with the help of the moving average, we can find out that what could be the directions of the market, whether it's a positive trend or the negative trend. As long as the green line is above the red line, we consider the trend is positive, and we can be with the trade instead of coming out of it. Next point. Okay, next is an Heiken Ashi candlestick concept. So this is a Japanese word, and this Heiken Ashi helps in terms of smoothing the line of the chart. It reduces a lot of noise in between. Let me take you directly to the chart so that you will have a better understanding of it. This is again the Nifty bank chart, and I will show you how exactly the difference between a normal candlestick chart and the Heiken Ashi chart, and how we can take an advantage of it. So for example, if you can see the market from here to here, it is on the upside, and in a couple of instances, if we can see in a couple of days, the market actually has been a negative. So there's a bearish candle over here, there is bearish candle over here. So in this kind of situation, how we should know that the market is or the trend is in a positive line or not. So here, if you can plot a Heiken Ashi, so you can see from the display, there's a candlestick and then there's an option called Heiken Ashi. So I'll just click Heiken Ashi. Now you can see over here, it reduced a lot of noises from the market. So it shows me only the green picture. That means the market is in the positive trend. Again, if it's falling down, you can see it's a continuous fall, and it shows a negative. So if you give a candlestick, you can see there are lot of gaps in between uh, the candles. Okay, so which also creates a lot of confusion sometimes. So this Heiken Ashi normally smooth the the directions of the market. The next point is the pivot point. So this is one of the most important stuff of the technical analysis. Now here, through the pivot points, we'll come to know how exactly the market has different support and resistance levels. So why support and resistance levels are important to know? Because when you take a trade, then after taking a trade, many times you might have seen the market has changed the shift. Uh, so there is always a reason behind it why the market has changed the directions. Okay, so that means if the market is going up and you have watched for next 5 days, the market is moving up and up and up, and then you bought a share, and then all of a sudden the next day onwards the market has started taking a u-turn. That is mainly because there are a lot of resistance levels placed when the market is in the upside. Okay, so we should know that what are the resistance levels so that it will help us in taking a right trade. I'll show you how to plot this pivot points in the chart. Also, one of another pivot which is very crucial, which is called the central pivot range. Now, this central pivot range formed with the three lines, and that is one of the major pivot, a strong pivot, I can say, where it's little difficult for any of the stocks to pass through easily until unless there's enough volume in the market to pass through the pivot zones. So let's see in the uh, in my zero the kite platform how exactly we can use these pivot points. Okay, so I have plotted the pivot points. I'll show you how exactly I have plotted. So this is a Nifty Bank chart. You have to go to the studies options and type pivot. So I have typed pivot over here, pivot, and you can see pivot points. So you just have to click the pivot points. Now this pivot points, there are central points, there's a central point, the black line, and this red lines are the resistance level. So this is a monthly wise, you can see June, July, August, September. So every month it will show what are the resistance levels that month uh, the Nifty has. So here you can see the R1, R2, R3, and these are the resistance levels it has. Similarly, the support also it will show with a green line, which is called S1, S2, S3. So these are the levels which is little difficult. So sometimes, the stock turns from there, okay, in the resistance level. Now, for example, if you can see here, um, the Nifty was moving high and it was bullish. And from this resistance level, it has touched and then it has come back. Okay. So for example, if anybody take a trade here, okay, so he'll be under loss. So for example, he will take a trade and the next day the market will fall. Okay. So that's the reason, the pivots are very important. So for example, the moving average is showing a positive, but how you'll decide that whether I should take the trade over here or not. Okay, you'll see that, okay, last 5-6 days the market has been positive, and after that you'll start taking a trade here, and then the market will fall down. So the pivot points are very, very crucial to know. That means here the most of the sellers get activated. Similarly, it happens with the support zone also. So you can see over here now, if the market is falling down, so it has touched the support zone and it has again bounced back. It has again touched the support zone and it has again bounced back. So supports means most of the buyers get activated, so it doesn't allow the market to fall so sharply. The next point we should know is about the central pivot zone. So we have to go with the central. So here you can see central pivot range is called a CPR. So if you form the CPR, these are the CPR. So it has the blue is the middle line over here and it is supported by two other lines. So sometimes the CPR is little difficult to cross. Now, for example, in the month of June, if you can see the bank has traded within the CPR and it couldn't able to break the CPR. So it was just roaming over here and there. Okay, another point, uh, if it breaks the resistance R1 R2, if R2 if the market breaks, that means we have to be a little cautious because the market may change. If R3 sometimes, if it breaks because of some of the news which is in the market, it breaks the R3 and it moves up. Similarly, to break S1 is okay, but S2, if it breaks, we have to be a little cautious while you have taken a trade, because the market again may swing back. To break an S3, it requires really some of the news in the market. Let me show you here where it has broke the S3 level. So you can see that it has broke the S3 level. This is what exactly, uh, okay, the news. Okay, here you can see that was in the March 2020. Um, because of the COVID pandemic, it has broke this three level: support one, support two, support three, and zoom. The market is in the bottom. Okay, so that's how the resistance levels, central pivotal zones are very important. Okay, the last one, I'll just explain you how exactly the Fibonacci retracement works out. So for example, you will see this, the market has been bullish and it is moving in the upward directions, but you will see there are a lot of corrections in between. That means you reached here point and next 3-4 days the market has moved down. Again, you have reached this point, the 3-4 days the market has moved down. Okay, so these are the points where you can see. Uh, so it sometimes becomes little difficult for an investors to stay with this kind of market volatility. But if you know that, okay, whether this levels uh, will be for temporary or it is going to change the directions. So for that, we have to draw Fibonacci series. So how to draw Fibonacci, I'll just show you. You have to go to this option called draw, and here you can see Fibonacci retracement. Okay. Now, for example, if I see this is what exactly the swing on the upside. So when in the upside, you have to draw the Fibonacci from bottom to top. So bottom over here. Yes. So this is the top. Okay. So in Fibonacci series, these are the levels which is very important and crucial, which is 38.2% and 61.8%. So 61.8 is a golden ratio. So that means if the market breaks this level, it will change the trend. Okay. So if you can see the market has not broke, even not even touched the 38.8%. So it's okay. We can actually stay in the trade and it has again bounced back. Let me check out this. So from here, the market has moved here. Okay. So in this time, okay, if you can see, the market has started falling down. It has touched it has broke 38.2, but it has touched 50%. And again, it has bounced back. Okay. Again, it has touched 38.2. It has bounced back, but it has remained in the bullish. Okay. So until unless it breaks 61.8%, okay, we will not get a confirmation the trend has changed. Okay, so it better to be in the stock. So these are the different methods through which we can find out how exactly we can use this technical analysis to take a better trade and to have a better profit. I'm sure this will help you, and if you try of your own these methods in your stock, okay, um, it will give you definitely some profit. It has helped me, so that's what I have shared. In case if you have any queries, if you like, please share your experiences, and if you have any queries, please write me on my page. Thank you so much for watching this video.